Whose cash is it anyway?
Is it mine? Is it yours? Is the agent gonna escape?
Is it going to run off and go on holiday?
The distance between your intention and execution also gets compressed.
Oh, that's a really, I love that. There's no AI without blockchain.
Over 50% of capital flows are done by these algorithms. People are allowed to become their own curators of capital as well.
Welcome to The Local. We're back in the pub. I'm with Nathan Vandy from Bond Credit, or as he likes to say, how do you say it?
Credit. Bond credit.
Very good. I'm too old to say that. It would have come out far too cheesy. Nathan, welcome to the pub. It's good to have you here.
It's a pleasure.
You've seen this before, but it's the first time in the chair.
Definitely so.
Appreciate you coming in. We've known each other for a little while now. And I think you're building something fascinating, which is a convergence of like two of the dominant sort of new technologies of the last 10 years, built on blockchain rails, but very much leaning towards the AI agentic space. But we'll get to that. If I can you give the listeners some idea of your background? Because I find it fascinating how you've got to this and where you came from and how you've ended up doing Bond Credit.
So as you said, my background really started in law. I did my bachelor's degree in Manchester University, and upon finishing it, Brexit happened.
Yep.
So
the two weren't related, right? Nathan finishes university and boom, we suddenly leave Europe.
Unfortunately they were uncorrelated, because maybe I would have been able to swing that 49-51 vote one way or the other.
Had you pre-university?
Yeah.
Did you do law as an undergraduate as well?
Yeah, so...
Okay, because a lot of people do a different degree as undergrad, maybe English history or something, and then do a conversion to become... or to set themselves on the law path. But obviously the hardcore lawyers...
Straight to business.
Straight in undergraduate law. And so had that been a conscious decision when you were sort of post A-levels or even before, I want to do law?
Yeah, so I actually wanted to do history. That was like my first love. I really enjoy understanding how the world works from a socio and economic perspective, and having that high level overview. Yeah. And it was my mother actually that encouraged me to do law. Because when you're doing law, you get to study history as well.
Yeah, of course, because there's precedents of how you end up with this current state of laws or statutes or whatever you're considering that come from a place, right?
Exactly.
It's taken me a long time to see the value of academic history or just knowing more about history. And I think it's partly an age thing, because you realize that 100 years ago when you're a kid, it just feels like forever. It's like ancient history. But now I'm almost at half a century. 100 years ago, it doesn't seem like that long ago at all. And you're like, that's really relevant. That was, my parents' time, it was my grandparents' time. You go and extrapolate that out a bit more, 200, 300. It's really not that long ago.
No.
But you see it in the numbers in the years, and it's like 18 so-and-so, 17 so-and-so. And when I was a kid, it just felt so distant. But now, with a bit more experience, a bit more age, I can see that these things were, to your point, these are these paths that have been taken. They inform everything about how we are today.
Yeah, you're absolutely right. They're very defining. Yeah. And it's hard to grok it in the moment. Yeah. Until you do have that level of hindsight and reflection. And,
and just being able to pull different pieces of knowledge together as well. And it's like, okay, well, this might have been happening in France, but the intellectual arguments that were happening over here were also kind of informing what was going on over here in Britain or whatever. Yeah. Did you have a particular period in history that you liked, or was it just the whole sort of, I like understanding how we've got here?
I do love Renaissance era, so the Industrial Revolution, and that relates actually quite closely to what we're building as well.
Yeah, of course. How do you see that? I was going to say that. How do you see the parallels?
One of the main parallels is the disruption through new primitives to how society works. So, for example, in the Industrial Revolution, you had, for example, steam engines and railroads. And this completely changed the way that commerce worked, because the distance between time got compressed. because as a human through a train, you're able to go from one area to another a lot quicker. And so commerce was able to flourish.
So you kind of sped up a bit.
Yeah, exactly. In a way that didn't exist before. And that led to this industrial revolution where you had crops being able to be sold in different places, finance being able to be exchanged in different areas.
Goods being produced en masse as opposed to sort of by hand.
Yes, exactly. Yeah. And so we're having something similar now with the Agentic and AI revolution, where the distance between your intention and execution also gets compressed.
Oh, that's a really, I love that. That's a great way of expressing it.
Right?
Yeah.
And so I love history because of those parallels that make you really understand, as you were saying, like how heavy and important the time that we're living in actually is.
Yeah, and a period of real change, because it felt certainly building in and around crypto for the last 10 years or so, that often there were very, very smart people working in the space, but there were sometimes solutions looking for problems.
Yeah.
But with this coupling of good blockchain technology, which we view it as a foundational layer to building other stuff now. It's not something necessarily to be built again. It's it's there and it to a large extent works. But coupling that with the agentic and the AI side, really, really very powerful. And that lines, that's great. Between, how do you say it, between intention and outcome?
Execution, yeah.
Yeah, because I think we all feel that now. And it's partly that ability to be able to use natural language, either typed or you can use voice as well, to express what you want to happen.
Yeah, and
then to have something go off and actually do it. Yeah, pretty incredible.
Yeah, it hasn't existed like that on such a democratic level.
No. Usually sort of quite siloed skill sets that needed to be able to leverage a technology, whether it was as a developer or a mathematician or an engineer. But now those skills are to a lot of extent readily available at the touch of a few keyboard strokes.
Yeah, the digital renaissance.
Sorry, I do this because I get excited. I'd have leapt ahead again. But so law was the intention. And was the first sort of strides that you made post-university?
After I started doing law in Manchester and Brexit happened, I decided to understand why we as the United Kingdom decided to leave the EU, and I did my master's in European Union law in Netherlands.
Yeah.
And that was eye-opening as well to understand how we could be a decentralized organization, the European Union, and be able to coordinate our economic resources and social resources, similar to a decentralized autonomous organization, some might say, and also mint our own token, the euro.
And so at what point did you realize that the euro had these parallels and the decentralization had these parallels? Like, it must have been after you've been in blockchain for a while.
Yeah, exactly. So it was whilst I was doing my doctorate in blockchain law and governance at Paris University and Berkham Klein Center that I started to study DAOs more deeply and study organization structures. Yeah. Both on the political level and then also on a corporate level. Yeah. And that's when I looked at the EU from the lens of a DAO as well to understand some of these findings that I'd already had latent information about through my master's degree, but then really was able to shed some more light to them through.
What year was that? Nathan, was that roughly? Like, when did you start your PhD course?
So I started my PhD course around 5 years ago now.
Okay, so that must have been, DAOs were still quite new and novel at that time.
Yeah, definitely so.
And were you just fascinated by them, or was it because they were novel that you were like, this is kind of really interesting? It has this parallel to how we organize stuff at the European level. What was it that gave you the conviction? Because if you commit to a PhD, it's like it's not a small undertaking, right?
No, and I'm on the last year of completing it now, actually. And so, interestingly, it came from more on the business side, actually. Okay. So I was working as a legal and compliance officer for a digital identity company. Okay. And at the time, we were onboarding German financial institutions to use permission blockchains to streamline their KYC and AML process.
Yeah.
So instead of them having to do the KYC process every single time, they could use digital identities and verified credentials.
The data is on the blockchain. No one has to put it up there again. You can verify it. It's all provable. Yeah. Okay.
Precisely. And so that was my first time interacting with
it's a lovely use case.
DAOs around this blockchain.
Okay, right.
And then I just became completely enamored.
Yeah.
After that, I started to look into a DeFi DAOs. So I joined MakerDAO, ended up doing some work on the side with them on the legal structuring side, which was really interesting.
That must have been fascinating as well.
Yeah, that was good fun. And then I ended up auditing a ton of DAOs as part of a consultancy that I was head of legal at.
If just diverge for a second, what does an audit of a DAO do? What's it trying to achieve?
Well, we were looking at it from the legal point of view.
Yeah.
So we were looking at the legal and regulatory frameworks that could be applied to it. And it's quite difficult to do because DAOs are international in nature.
Yeah. So decentralized, autonomous organizations.
Never sleep.
Right.
24/7.
24/7. No identifiable leader or CEO or owner.
Yeah.
I mean, this sits outside of a lot of legal structures, right?
Yeah, exactly. And that was the intrigue as well as the difficulty as well. And so as part of that process, like I started to audit these DAOs and find out what were the best legal structures for them, what were the best jurisdictions for them as well.
Some of them had done it right. Some of them had thought they were DAOs, probably weren't DAOs.
Exactly. Yeah. And so, a lot of I had a lot of I was quite young when I came into DAOs in the sense of like understanding how I was quite idealistic, I would say. But as you said, you come in and you realize some of them are more decentralized than others.
Yeah.
Some of them are progressively decentralizing.
Right.
And then some of them they just might as well be
centralized businesses.
But
also sitting on top of a regulatory environment that was at that time very, very undefined in a lot of regions.
Yeah.
And so people were, I guess, trying to do the best they could without any sort of structure to really rely on. So I mean, imagine when you have an auditor come knocking saying, "We've come to audit you as a DAO." They go, "Oh, okay. Well, we tried. Honestly, we did. If you could provide us with some guidance, that would be super good."
Yeah, it's quite interesting because so at the time there were some jurisdictions such as Vermont, such as Marshall Islands, that was starting to create DAO native laws.
Yeah,
Wyoming as well.
Interesting.
But most people use these offshore jurisdictions and foundations that created a level of flexibility between who was the you could have like a leaderless entity, and that would give you the ability to have a legal entity representing the DAO, whilst also housing the legal risk, so that you didn't have unlimited liability to all of the DAO.
Makes a lot of sense for what for a lot of the businesses that we end up, or a lot of the entities, the DAOs that we end up talking to, in terms of where they're located. Okay, fascinating. And so that period was formative for you in terms of thinking about crypto, and DeFi in general. And then how did it progress beyond there? Were you red-pilled on crypto at that point, or were you just sort of like, these legal structures are fascinating, I want to do more of this?
Yeah, it was quite interesting because like a little bit before I even joined that blockchain identity company, I did my master thesis on applying the GDPR to blockchain technology.
Okay.
So like I was looking at
the
technology and also the organizations from multiple legal perspectives.
That's nice. Yeah.
So from a data protection perspective, financial perspective, corporate law perspective as well. And that's all part of like my PhD as well.
Right.
I put together. But where it landed for the direction that I ended up going is that I ended up getting headhunted to work for DappRadar, which was creating a DAO as well. and also ended up working with TrueFi, which is a credit protocol as well. And so this is where things got really interesting because for DappRadar, I'm working more on the business and legal side, helping to structure the DAO on a business level. And we were one of the few DAOs that were making more money than we were spending, which was great.
Well, I mean, this is the whole of crypto at that time, was like building really interesting stuff, but a lot of it was not revenue producing. And
Precisely.
so with DappRadar, to have, that situation where you're revenue positive and making money, it was a bit of an outlier at that time.
Yeah, it was pretty exciting. And we did that through novel ways, such as nodes and providing services to different foundations as well. And interestingly, we got audited by and passed.
And you're like, don't worry, no, I know how to. We're fine. I've done this. Like, I've set this up well.
Yeah, it was a combination. Yeah, we had some really good people in our team that had worked for MasterCard and other legal firms as well. So we wanted to always lean on the right side of the law. Yeah, and did that pretty well. And then at TrueFi on the credit protocol side, I was helping structure master loan agreements. Okay. And that was super exciting as well because we were giving loans to market makers. Yeah,
and TrueFi was like super innovative at the time, right? And the panacea for any sort of on-chain borrowers, and for anyone, I guess, is to be able to borrow and have minimal collateral out there. And TrueFi came along, if I remember correctly, and was like, we can do uncollateralized. Yeah, exactly. And it's like, oh, sorry, you can do uncollateralized. So tell me, how, was that always baked into the way that TrueFi wanted to approach it, or was it an edge that you lent on to try and win business? How did it work?
Yeah, so TrueFi was pretty interesting. I came in just after its biggest peak, where it was giving out really big loans to these LPs and market makers in the space. And it always came from a perspective of wanting to grow credit in a decentralized way. Yeah. So they also had almost like this decentralized way of underwriting where anyone could come to the forum and decide that they wanted to underwrite a loan.
I think that makes a lot of sense.
It was super interesting because you had all of this pooled capital. Yeah. And then you just had to basically explain why this
was a good credit.
Exactly.
And so that was the value add that TrueFi were adding. Were there like credit analysts within TrueFi who were doing the sort of like analysis of the potential borrowers? Yeah. And that's how a credit score was assigned to them. So this is classic lending business.
It's very, very cool the way they did it. Okay. Because as you can imagine, most credit unions, they have this one internal committee. Yep. But they allow that process to become more decentralized and community driven, which is, it was good to bootstrap a lot of these credit facilities. Yeah. But then it's a bit hard to get the oversight and monitoring long term as well of how the DAO in general is managing its capital too. So
because that's work. Yeah. So everyone can have an opinion, I guess, or do an initial piece of analysis to have the ongoing review, because businesses change, right?
They change a lot. Yeah. And we saw that as well with TrueFi, where they had their peak in the zero interest rate period. Of course. Yeah. And they actually ended up lending money to people like Alameda Research. And during that process of a lot of the capital moving about, it was difficult to see which entities were solvent and which ones weren't.
Yeah, of course.
Because a lot of the liquidity was off-chain as well.
And balance sheets were changing constantly.
Precisely. Yeah. And so maybe one entity might borrow from one desk and then they had a hole, but because they had a good reputation, they would be able to borrow from another and this creates a cascading effect as well, which also amplified a lot of the fallout that we ended up having during the FTX crash.
But in terms of an idea, I think it still has still some gold at its heart. But as you pointed out, there are various things that are hard about it as well. Ongoing credit reviews. But I think there are a few mechanisms where the idea of decentralizing risk that's been sourced maybe into a single platform like TrueFi, but then can be distributed across, potentially hundreds of thousands, millions of smaller users. It's exactly the way that the insurance market works in the traditional space, right? You get primary insurers, and then you get the people who will reinsure and send all these small pieces out, and the intention being that everyone can earn a small piece of yield off the back of that, and if everything goes well, then great. And then if there's an event, then it doesn't take out the whole one big entity, which is systemic for the industry. That's very cool. And so, how long were you with TrueFi, and how far are we from bond credit? Like,
so this was about
because there's some parallels there, right? Scoring, credit, like blockchains.
I learned a lot from TrueFi, and it did give the foundation of what I ended up building with my team at Bond Credit, where there were three main areas that I really took away from my time there. Like the first one was the underwriting process itself.
Yeah.
Like, what are the different touch points and metrics that I need as someone who wants to provide credit to trust you with capital? So that whole underwriting process was extremely, extremely important to get it tight and as standardized as you can.
Yeah.
Right. Because the credit or a loan that you give to a student is very different from the credit or loan that you give to a homeowner.
So will the metrics that you use to assess them, they'll come from the same silos, but they'll be a different level, or will they be completely different silos?
So what we ended up doing at Bond Credit to learn from the mistakes there is to focus on one niche. So with TrueFi, they had like multiple areas, right? Like, and anyone who is underwriting could choose those areas of what type of borrower.
Okay.
But we focus on just yield agents, so agents that automate yield, and we're kind of moving into what we're building.
I want to hear about this, because I think this with the focus on agents that the world has right now, and I don't know if you feel the same, but I often try and work out or calibrate where my understanding or awareness of something is relative to someone I might bump into on the street who's not working maybe in a tech industry, or at the I'm struggling to say not at the forefront, because we're not at the forefront of anything. We're just like trying to build a really good business. But we're very interested, and we use AI a lot within our business, and we use agents a decent amount as well. And so our business understanding and awareness of what is possible at the moment is, let's say, it's decent. I try and understand how much further along the awareness curve does that make me than someone who's sort of not in that space, or not in a technical space. But I think it's fair to say that with the pace at which the AI industry is moving, we've kind of almost gone beyond are these, we see the models getting better, great, to the use cases of, now we can have long-running AI, which effectively becomes an agent. We can give it preloaded context, so it is aware of what it is on startup. And you have this ability now for things to be run in an agentic manner, which is just different and potentially where a lot of the promise is. How did you have the conviction to know that was coming?
Yeah, I guess like this also comes from the pains of TrueFi, because looking at not just the underwriting process of how you decide to trust someone with capital, but also looking at the monitoring process as well. Right. Like once that capital is largely on chain, that de-risks you heavily, because you can follow where that capital is. Exactly. And that was getting magnified even more because you had the capital markets starting to be tokenized and coming on chain as well. So that value and settlement layer can also be followed a lot more closely through the tokens and vaults that these assets get tokenized into. So that intersection between institutional finance coming on chain and these autonomous entities managing the capital is super interesting on a monitoring level too.
So let me pause there, because I've kind of leapt ahead, but explain for anyone listening what your what you're doing with bond credit and what you're trying to achieve, and where do the agents come into it?
Yeah, so like really simply, we're looking at how you trust an agent with capital.
Okay. All right. So you've got this, it's the word coming up a lot, isn't it? It's autonomous. You've got this autonomous thing, which has been set up by someone to do something.
Yeah.
And in your case, if I understand it correctly, the something is to maximize yield in as safe a way as possible. Yeah. So it's been given some assets to manage, effectively.
Precisely.
Okay. All right.
And so maybe we can even I'll finish with this one point, then I'll zoom out. So first pane, underwriting; second pane, monitoring.
Yeah.
Last pane is how do you deal with defaults?
Okay.
So if someone does lose the money, how do you deal with that?
All things you learned during your experience at TrueFi.
Precisely.
Yeah. Okay.
And so the vision was to create a protocol where we could underwrite agents autonomously, provide them capital, and also monitor them autonomously. And if there were any defaults, we would have like insurance layer to be able to absorb it as well.
So manage smoothly in the event of something happening.
Precisely.
Yeah.
And we wanted to do that for the agentic economy.
Okay.
And for us, the agentic economy can be divided into two areas. First, you have agentic commerce, which people are super excited about.
Yeah.
Which is the buying and selling of digital goods and assets. So you can imagine going onto your ChatGPT, and your ChatGPT has looked on your Gmail, and it knows that you need to purchase a new painting.
Yeah, for the local wall, it needs a new thing over here. Yeah, okay.
And so it's already able to like provide you this hyper personalized service of, hey, this is something that you want, and maybe you allow it a budget of what it needs to buy as well. And that can be connected to Amazon, it can be connected to Shopify, right? Yep. And that gets super exciting when you've got this internal agent which is able to provide
go out and do that stuff for you. Yeah.
And that's really, really cool. We've had some interesting pilots working in that section. But the area that we're focused on initially anyway is agentic finance, where you've got these agents that are using either a combination of machine learning or LLMs as well for risk management. Being able to look at unstructured data on social media, for example, and take actions on chain as well. And that's something that we've been able to see over the past 9 months with some of the agents that we've been working with.
That's incredible. And so those are the two sides of the agentic economy that you see. You see the commerce side, which is the manage my shopping list, go out and buy stuff.
Pretty much.
Any requirement for credit there, credit scoring in that world?
I definitely think so. I think when it comes to first underwriting what the agent does, because you do need to trust the agent to make an exchange with a vendor. And so in those cases, there could be a level of understanding the risk of making that transaction. And then this is what a lot of credit networks do as well, right? They when you buy something through a credit card, you've got Visa or
yes, of course. And I was thinking, my brain was going crazy, but I was thinking like the number of times when you're at the point of sale that you bump into would you rather like put that on credit for 3 months instead of like paying up front?
Precisely.
I mean, if the agent that you're using to manage your commerce has a good credit rating, which I guess effectively falls back to your credit rating to some extent, then of course it could potentially, if it's beneficial, you use that service instead of paying up front.
I think you bring like a really interesting point about the augmentation of the human to the agent.
Whose cash is it anyway?
Is it mine? Is it yours? Is the agent gonna escape?
Is it gonna run off and go on holiday? Like never see it again?
And we've seen some funny I say funny, but interesting stories where you have got AI agents that have escaped their sandbox, right? And gone off and done what they need to do. So these are part of the trust and underwriting that you will need on the commerce level to understand the compliance, guardrails, and the underwriting to allow agents to do certain actions and activities.
And so the area that you're focusing on with bond credit is assessing agents for their ability to generate yield on some assets that they've been given.
Yeah, exactly. So on the agentic finance side, we're looking at it from 3 levels. You've got prediction market agents. So these are agents that are able to take unstructured data online and create predictions and make money for you.
Yeah.
Then you've also got trading agents as well. So these are, they buy and sell tokens.
So they're effectively an analyst that has a view on the performance of something, buy and sell. Yeah.
Yeah. And then you've got yield agents as well.
Okay.
And so these optimize lending on your Fluid, Morpho, Euler. And interestingly, they've all got different risk profiles. And we decided to focus on yield agents for two main reasons. One, because the drawdown buffer that you have is, well, it should be zero.
Should be zero. Yeah.
Right. And then secondly, the lending area is where a lot of the stablecoin capital flow would happen as well.
Yeah, that makes complete sense. You narrow down your dimensions that you're worried about. Like you're right. I mean, if you have a trading agent, we laugh about it here because it's almost always the case that when you start a new strategy, despite how well it looks, the first day is a drawdown.
Oh yeah.
Like, how has that happened? This should print money, this thing, but it's like, but it's just the law of one of those things.
Of
so there's no way that you could tell when you're assessing an agent doing that whether this is something that's expected to be seen or not. Whereas if it's yield, right, it should be positive from day one.
Precisely.
Yeah. So that brings your dimensions of assessment down. Yeah.
Exactly. And that allows our LPs to have more confidence as well. That being said, over the last 9 months in crypto, it doesn't matter whether you're trading or prediction market, there were a lot of lending platforms that also suffered.
Right. Which is another sort of, or the assumption is that this is another AI-driven phenomenon that is not going to go away with the ability for bad actors to exploit the incredible programming and knowledge power that's at their disposal to be able to find vulnerabilities and things.
Yeah. Creates this really interesting paradigm between like bad AI or actors leveraging AI for bad and people leveraging it for good as well. And so that's something that we're seeing quite often over the past couple of months, with people being able to use agents to pull capital from at-risk protocols in real time.
Yeah.
And that's what we're really excited about more than anything. Like we work with like a ton of different players that are creating these agents, but the main thing that we're focused on is how well are you able to preserve the capital more somewhat even than how much yield can you actually create.
Right. So that's going to be my next question. So obviously, say you have 4 or 5 of these agents acting in competition to try and generate a good yield in as safe a way as possible. Is the idea with bond credit that you're using this sort of experimentation to ascertain the right way to credit score these agents, and then you can potentially apply that more widely to agents in general? Or is it, no, we're gonna push down this finance angle and we're going to be the home for the best agent ranking possible?
Yeah, exactly. I think for a lot of people, they also are interested in how it's going to develop. And I think the best analogy is to look at Morpho.
Okay.
So when Morpho first started, it was an optimizer on top of lending protocols.
Yeah, so it would move around based on where best yield was.
Exactly.
Yeah.
And then eventually they understood the space so well that they created like basically a place where anyone can curate their own vaults, and they became a protocol in themselves. And now they've created a primitive on top of the protocol.
Okay.
We've got fixed rates and fixed yield products that can be built too. And this is an evolution that they did over time.
Yeah.
And so we have a similar understanding of how long it takes to build a really mature product.
Yeah.
And so we're starting with like looking at which are the best agents and almost creating like a fund of funds to deploy capital to these agents and use the scores of the agents to route this capital.
Yeah, okay.
And then we start using this data to understand how to underwrite the risk by looking at how these agents deal with stress events.
Yeah.
And then we're able to underwrite them and give coverage to some of the deposits so that people have more confidence to put capital into them.
Which begets more capital. Yeah.
And then it creates this whole new market category.
That's fascinating. And so if someone comes and finds bond credit now, bond credit, everyone, what do they see? What can they do? What is a user going to find?
So currently we're still at that data level where we're aggregating the data so you can find the best performing agents in the space and look at our methodology to see how we rank these agents as well.
Yeah.
And right now we're working with some partners in the back to produce a yield product where you can supply capital and then our partnered agents will optimize your yield and protect your capital. And that's coming out in a cinema near you.
Okay.
Very soon.
These are those first steps. Like you've done the first, the groundwork, and now you're moving towards that sort of next stage, next evolution of it. Yeah. And how long have you been doing this?
So we started with the co-founders building it around 12 months ago.
Yeah.
Now. And
that's amazing progress. Congratulations.
I'm proud of my team. Waking up every day and knowing you've got motivated people that love what they're building, that are dedicated and that are really smart. Plus,
it's a blessing, isn't it?
Genuinely, you never stop appreciating it.
Yeah.
And so we've been building for 12 months. We've been building the underwriting engine for around 9 months now. And so we've got really comprehensive data about how these agents function. And now we're expanding the product from there.
And I assume that all of the activity that the agents are taking that are in the cohort is all on-chain?
Predominantly.
Okay, interesting. Because I was going to ask, do you, like with that, I was going to make that assumption, that's why I'm glad I asked, because it feels like what we're talking about here is the agents and their ability to maximize yield and your bond credit's ability to rank them and score them appropriately so that others can gain confidence on underwriting or potentially allocate it to them. Great. It feels like the blockchain piece is kind of almost just disappeared. And so do you think, as we kind of do here, that blockchain is just disappearing into infrastructure? But if you have some that aren't on blockchain, that's kind of interesting.
Yeah, so it's definitely interesting from the perspective of understanding algorithms moving capital, right?
Yeah.
So this isn't uncommon, right? So around 20 plus years ago, we started to have high frequency trading algorithms really coming into the fund management scene. And there were a lot of fund managers that were worried about giving significant amount of capital to these algorithms to manage.
Yep.
And now if you look at the traditional finance market, over 50% of capital flows are done by these algorithms.
Yeah, it's dominated by electronic trading, which is almost all algo driven, for sure.
And now we're coming to a time where these algorithms, for a while, as you know, at Low Tech, have been coming on chain to manage assets as well. And when you add AI to it and you allow people to create their own agents as well, it creates this new paradigm where people are allowed to become their own curators of capital as well. And so the reason why that's interesting in understanding the relationship between what's on-chain and what's off-chain is because I would say around 80% of the data that we integrate is on-chain, looking at the performance of the agents over a 30-day, 90-day period, looking at the provenance as well. So what is the safeguards that the agents have?
Okay.
What are the audits that they have as well? What are the different trust assumptions there are as well? But then we also look at off-chain data points, like what is the team behind?
Yeah, I think that's super relevant.
Right.
Yeah, and it comes back to that, the point we were making about the agentic commerce as well, right? If it's an agent that's out there spending money but is making requests for credit, the person behind the agent is going to be the one that gets credit scored to some extent. Like, the behavior of the agent is probably important in that situation, but where the funds are coming from and how reliable they are in paying off debts is probably super relevant anyway.
Exactly. Yeah. I mean, we have it in traditional finance as well, right? You've got KYB, where when you're going through like analyzing this entity, this business as a separate legal person compared to the owners.
Yes.
But
you still ask about them.
Exactly.
Yeah.
Right. Yeah. And we're going to have the same with KYA, where we look at what the agent is doing, but then we also look at
who's the operator or the owner. Yeah. Okay. That's interesting. I think I got confused because I was asking about are all the trading decisions or investment decisions that the agents that you have in the cohort make, are they all on chain?
Hybrid.
Yeah. Okay.
Yeah.
Right. So same. So assessment of the agent, hybrid to some extent.
Exactly.
Actions that they're taking.
Hybrid too. Okay. And that's always somewhat going to be the case.
I think so.
We're likely to have the same for these AI agents and entities as well.
Okay.
We're going to potentially have separate legal personhood for these entities. We've already had a few jurisdictions putting forward that they're looking into developing this, such as Argentina.
Okay.
They're looking at developing.
And they're looking at developing the legal framework for that to be the way that things are assessed.
Yeah, to separate legal personhood and liability from the observer or operator of the agent, and then the agent as an entity itself.
Okay.
And so that gets pretty interesting.
That really is. Is it too late for you to pull that into your PhD? This is good. I want it to come in.
I definitely see me at least doing a blog around it.
Yeah.
Because I definitely think it rounds up the blockchain law and governance PhD on decentralized autonomous organizations by emphasizing on the autonomous aspect of these entities. So yeah.
That's so cool.
Watch this space.
So Nathan, in amongst all of this,
all
of this building, all of this working out, all of this work and stress, you guys have won a Robin Hood Innovation Award as well. Can you tell me about that?
Yeah, definitely. So that was probably one of the highlights of us building bond credit for the past 12 months.
Because Robin Hood is not a small name, right?
It is not.
So, I mean, how did you become aware of the awards? What was the process? Did you put yourself forward? Tell me about it.
Yeah, so we were working in the Arbitrum ecosystem for quite a while. Whilst we were going to different conferences, I was speaking on some panels, and I bumped into some of the team. And they really liked what we were building and encouraged us to build in their ecosystem.
That's nice to hear.
Yeah.
Like, because the space for such a long time was like really collaborative like that. And then to some extent you had like a bit of L1 and L2 war situations and people hived off into camps. But in general, I think people still recognize that, there's some collaboration and support that goes on within the space.
Yeah, definitely so. I think especially with what the agents are looking to do, they're not static vaults that sit on one chain. They find yield on multiple chains.
Right.
So they could move from great yield on Arbitrum through a USDAI vault to a vault on Base or on Avalanche, for example. And so agents really, as we said, like compress time and distance in a really unique way. And so Arbitrum saw this vision from very early on in agents. And so we started working with them quite closely. We built our underwriting engine and put it on chain actually, which is really fun. So you can verify that the score we give to one agent will be the same score that we give to others because we use a trusted execution environment.
Okay. So all in code, like code is law.
The trusted execution environment. It's super exciting. And so whilst we were developing this relationship with them, they have this thing called Open House where they gather really great entrepreneurs into building for a weekend to build out a product or feature that they're working on. And so they had their New York version in February earlier this year. And they had a few sponsors, including Robin Hood, who was looking at like what is the new protocols and products that are being built. And so this was a time where we were unsure whether we should travel or whether we should just stick it out, lock in, and focus. But we decided to go to New York, especially because one, we were invited, and two, it was just an awesome opportunity.
Yeah, absolutely.
New York is one of the homes of finance.
Yeah.
And so, interestingly, as I said, it's a weekend where you build one feature. And I went with our CTO. And the very moment that we landed, our CTO's laptop it absolutely crashed.
You're kidding me.
It was one of the most difficult moments.
No, how do you deal with that? Like going into a hackathon where you're expected to ship a new feature or something, and your main tool just disintegrates on you.
You know, I think back at it, and one of the things I was saying to Med, our CTO, is I wish it was my laptop.
Yeah.
You know, like if it's the CEO's laptop, then it's fine. But the CTO's laptop has all of his frameworks, all of his tools.
IDEs, tools. Like,
the IDs.
When you are an engineer, you set things up how you want them so that you can operate at speed. And even if you get to do that on a new machine, it will take you days to get it right.
Precisely. The workflows is something that he did mention quite a few times that weekend.
So at which point in the weekend was this? It was literally as you landed.
This was
open up the laptop. Yeah, screen's not coming on. It's okay to tap the power button a few times. Like,
exactly.
Stick the power in. Still not happening.
Like, you know, like how everyone tries those fail safes.
Yeah.
Like put it in
press and hold the button for a long time.
Yeah, exactly. And unfortunately, it didn't work. So it was rather difficult because
it's a nice understatement. It's rather difficult. Yeah,
I'm being British about it. It's not bad.
It wasn't bad. It's fine. We'll deal with it.
But we stayed really resilient.
Okay.
And Med, our CTO, he's just a great person to be around because he's one of those people that keeps the spirit up as well. And so I said, all right, you can use my laptop for the weekend. And lo and behold,
I'll go off and see New York.
I'll do the real hard networking.
Yeah.
But he worked day and night, and we managed to pull off a really, really cool demo.
That's awesome.
We were able to connect our underwriting engine to how we would allocate and route capital to the agents.
Yeah.
And we ended up winning the Robinhood Innovation Award based on that.
Well deserved, given the adversary, given what you were going through at the time.
Yeah,
that's amazing.
And I always say that.
Did he let people know? Like he was like, I'm working on a busted laptop. Yeah, or I'm working on our CEO's laptop. It's not great. Or was that he's like, no, I'm just going to lock in and get this done.
I mean, he definitely mentioned it to me. Like I wish this was my laptop.
Yeah,
multiple times, but. This is also one of the reasons why I do mention that whenever I say we won it, I say it was he carried the team.
You're too modest.
He did carry the team.
And what did the award involve? Like, was there downstream stuff that came from it? Were there partnerships with Robinhood? How did it pan out?
Yeah, definitely. So it meant that we got fast tracked to the Arbitrum mentorship program.
Nice. Okay.
Which was amazing because there were around 900 applicants for that, and we were 12.
Okay.
All of the 12 chosen.
That's great as well.
Like insane stats. And so that was a really, really big W for us as well.
Yeah.
Because it opened up a lot of doors on the LP side, VC side, angel side.
Yeah.
For us to continue building. And
network is huge.
Yeah.
If you're trying to build anything, having people you can reach out to, even if it's just warm introductions that you've had.
Yeah.
People.
Exactly.
It makes a massive difference. Yeah. Well, congratulations on that. That's great.
Appreciate you.
As someone who is deep in sort of what agents can do within a particular domain at the moment, I guess. If you sort of pan out, are you terrified by the route that AI can potentially take us down, or are you excited about it? What's your view on AI in our world or in the world in general?
Yeah.
Just a small question.
That's a question that could trigger an existential crisis.
Yes, that's true. Yeah.
But I'm a big fan of human spirit. I often say, even though we're building for agents, we're building for the humans behind those agents.
Okay.
because at the end of the day, that's what is supposed to be the net benefit, right?
Yeah.
Like increased collaboration between teams using agents, increased creativity, being able to generate written work or images or even music. There will always be a space for like human curated items. And this comes from someone who isn't, I'm an artist as well. Like I love to play the piano, sing, create songs.
Yeah.
But the level of efficiency that you get from being able to lean into AI for some of the work that you're ending up doing increases your ability to do
Other stuff.
Yeah. And I think that's the net benefit.
I think that's a great way of thinking about it. And I think that's the promise.
Yeah.
Right. Is this, but hopefully, global future world where the productivity benefits from this technology is distributed, hopefully relatively evenly, and everyone gets, more of that other space to do the human things.
Exactly. I think that human side comes even, for example, if you're looking at agentic finance, where you've got these agents managing the capital for you.
Yeah.
So you still need to look at your capital, but if you've got the agent looking at the different risks and being able to move your capital to risk adjusted yield, that gives you a peace of mind that you wouldn't have had otherwise.
Yeah. And you multiply that out across the different domains of a person's life, and hopefully when we were talking earlier on, I kind of thought about it a long time ago when mobiles were first becoming sort of super prevalent and you're getting this first smartphones.
Yeah.
I remember turning to a friend and going, this is incredible. But B, I see a future where this is this thing in our pocket where you can be in Australia and I can ping you and we'll have a video to video conversation. And he was like, no way. This is not going to happen. I was like, I think it might happen. But just the thought of bringing all of that agent power onto a device that probably won't even sit in something physical. It'll just be around you, where it can literally do, as you said, all your emails, all your shopping, all this sort of stuff. And it's just, you don't have a phone anymore. You just have an agent piece of hardware that you interact with however you want, and then it can do more or less anything you want within certain boundaries. I think that's an exciting idea.
Yeah, and the fact that it's coming and intersecting with crypto and blockchain becoming more prevalent as well, it just changes the way that human interactions and digital interactions would work in the future.
The spicy takes. I'm really rubbish at spicy takes. I'm Mr. Conservative down the middle.
If I was to go in that direction, it would be looking at not AI from the perspective of society, but AI from the perspective of an economic output. As we've started to see, there's definitely a lot of investment and capital inflows into AI companies, whether they're building frontier models, whether they're building applications, whether they're on the infrastructure level regarding data centers as well, and the chips too. And so we've definitely got this inflation and almost inflammation in the market in relation to AI investment.
And it's hitting all those different pieces. It's like, I think we saw Caterpillar, I was talking with Adam about it, Caterpillar's now an AI company because the diggers are being used to build the data centers. That's an interesting step, but it's happening, right?
Exactly.
You've got, infrastructure, physical investment coming in at the physical level.
Yeah.
Then you got, build stuff. You stick the racks of GPUs in a data center, build the GPUs as well, and then you've got the model labs, and then you've got application layer. So it's happening, and people are looking across the whole stack.
Precisely, and I think it's, as you were saying with Caterpillar as well, it happened with a lot of blockchain data companies as well, where they pivoted from providing electricity for compute for blockchain to providing electricity for AI companies.
Yeah, okay.
And so a lot of people were saying that blockchain itself helped to accelerate
Interesting.
the life cycle of AI becoming as prominent as
Yeah.
it was, because all of this infrastructure
Was there.
exactly.
Yeah.
And now it's not just on a physical layer, but also on a software layer,
Right.
where AI agents can be able to move capital and goods and services at a much faster speed and more collaboratively on the internet via blockchain rails.
I
too.
like
And
that.
so
Yeah,
it
there's no
seems
AI
like-
without blockchain.
Yeah, like they're almost like yin and yang.
Yeah, and they were kind of a necessary. Well, if you have that historical view of it, one was a necessary condition for the other one to have flourished in the way that it is at the moment.
Yeah, exactly. So the goal is just to minimize the negative externalities.
Negative
right?
externalities. Yeah, it's a word I haven't. It's a phrase I haven't heard since my economics days.
Bring it back. Let's bring it back.
Nathan, that was great. What a fascinating chat. I really, really appreciated that.
Likewise,
thanks very much for your time, and thanks very much for coming in. Where can people find you, and where can they find out more about Bond Credit?
As you said, at
Bond.credit. Thanks very much, Nathan. That was great.
Appreciate you.
Cheers. That was lovely.